Did you know that 88% of the world's billionaires are self-made, and the majority of them built their wealth through investing? It's a mind-blowing revelation, isn't it? This fact underscores the critical role that investing plays in wealth creation. It's not about having a high-paying job or winning the lottery. It's about making your money work for you. And one of the most effective ways to do this is by investing in stocks. This video aims to guide beginners on how to get started in this wealth-building journey. We'll delve into the nitty-gritty of stock market investing, discussing everything from the basics of investing to selecting the right stocks and even opening an investment account. Investing might seem intimidating at first, but with the right knowledge, anyone can become a successful investor. Before you start investing, it's crucial to understand the basics. Let's begin by defining what investing is. In its simplest form, investing is the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit. It's like planting a seed and nurturing it over time, so it grows into a healthy tree that can provide you with fruits year after year. Now, you might wonder, isn't that similar to saving? Well, not quite. Saving is simply setting money aside, usually in a safe place like a bank account where it earns minimal interest. Investing, on the other hand, involves taking calculated risks with that money in the hope of earning a higher return. This brings us to the concept of risk and return. There's an old saying in finance, the higher the risk, the higher the potential return. It means that if you want the chance to earn more money, you need to be willing to accept a higher level of risk. But remember, it's always important to invest within your risk tolerance level and never risk more than you can afford to lose. Now let's talk about the magic of compound earnings and the power of time. Compound earnings, also known as compound interest, is the process where the earnings on your investments begin to earn returns of their own. This can significantly increase the growth of your investments over time. The sooner you start investing, the more time your money has to grow and compound. That's why they say the best time to start investing was yesterday, and the second best time is now. Investing is not just about making money, it's about making your money work for you. By understanding the basics of investing, you're already one step ahead towards creating a sustainable and profitable financial future. Remember, investing isn't a get-rich-quick scheme. It's a journey that requires patience, discipline, and the will to learn and adapt. So, buckle up and get ready for the ride. Now that you understand the basics, the next step is to open an investment account. There are several types of investment accounts you could consider. You've got your individual brokerage accounts, retirement accounts like an individual retirement account or a 401k, and education savings accounts. Your choice depends on your financial goals. To open an account, you typically go to the website of a brokerage firm. You'll need to provide some personal information, including your social security number and employment details. You'll also be asked about your investment goals and risk tolerance to help guide your investment decisions. Next, you'll need to fund your account. This can be done by transferring money from your bank account. Once the account is funded, you're all set to start making investments. Remember, opening an investment account is not a one-size-fits-all process. It's crucial to choose the account type that aligns with your financial objectives. Opening an investment account is your first step towards financial freedom. Investing in stocks is a great way to start your investing journey. It's like stepping into a marketplace where companies are offering you a share of their future profits. But with the vast sea of companies out there, how do you pick the right ones? Well, it begins with understanding the company. Do some research. What do they do? How do they make money? Are they profitable? How do they fare against their competitors? These are all crucial questions to ask before you invest. Next, consider the company's financial health. Look at their balance sheets, income statements, and cash flow statements. A strong company will have healthy finances with steady revenue growth, manageable debt, and positive cash flow. But let's be honest, researching individual companies can feel overwhelming, especially for beginners. That's where index funds come in. Index funds are like a prepackaged basket of stocks, representing a broad market or a specific sector. They offer diversification and lower risk, making them a great option for new investors. Now let's talk about investing in syndications. If you're unfamiliar with the term, Syndications are investment groups where investors pool their money to buy assets they couldn't afford individually. In the stock market, this might mean investing in a mutual fund or an exchange-traded fund. Investing in a syndication allows you to diversify your portfolio and spread out risk. Plus, you get the benefit of professional management. The fund manager does the heavy lifting of researching and selecting stocks, so you don't have to. But remember, all investments come with risk. The stock market fluctuates and prices can go down as well as up. So, always invest money you can afford to lose and have a long-term perspective. Investing in stocks allows you to own a piece of a company and share in its success. It's a powerful way to grow your wealth and achieve financial independence. So, start your investing journey today and let the power of the stock market fuel your path to wealth creation. Real estate syndications are another excellent investment opportunity. These are essentially partnerships where investors come together to invest in larger properties than they could afford individually. It's like pooling your cash with others to buy a mansion instead of buying a small house on your own. You may be wondering, how does this all work? It's simple. In a real estate syndication, a sponsor or syndicator identifies a promising property, does the due diligence, and manages the investment. As an investor, you put your money in and become a limited partner. You share in the property's profits without the hassle of being a landlord. Now, let's talk about potential returns. The beauty of real estate syndications is the dual profit stream, cash flow and appreciation. Cash flow is the income generated from the property's rent after expenses are deducted. Appreciation refers to the increase in the property's value over time. These returns, however, don't come without risks. The property's value could fall, the rental market could slump, or the sponsor could mismanage the property. But remember, higher rewards often come with higher risk. There are also different types of real estate syndications to consider. You have residential syndications, which include apartments and senior living facilities. Then there are commercial syndications, like office buildings and retail centers. And don't forget industrial syndications, such as warehouses and distribution centers. The choice depends on your risk tolerance and investment goals. Keep in mind, though, that real estate syndications are not liquid investments. Your money will be tied up for a period of time, typically 5 to 10 years. So only invest money that you can afford to have locked away for a while. In conclusion, real estate syndications present an exciting opportunity to invest in substantial properties with potentially significant returns. They provide a way to diversify your investment portfolio beyond stocks and bonds, and they can generate a steady stream of passive income. Real estate syndications allow you to diversify your investment portfolio and generate passive income. Investing is a journey, and it requires patience, discipline, and knowledge. We've covered a lot of ground today, so let's take a moment to recap. We've dived into the basics of investing, distinguishing between saving and investing, and the concept of risk and return. We've walked through the process of opening an investment account and the various types available. We've also explored the world of stock investing, including how to pick the right stocks and the power of compound earnings over time. Remember, investing is not about getting rich quick. It's about building wealth over time. The magic of compound earnings is that the sooner you start, the more time your money has to grow. So, don't delay your journey to financial freedom. We've also journeyed into the realm of real estate syndications. These investments can provide an excellent way to diversify your portfolio and generate passive income. But as with all investments, there are risks involved. It's crucial to continue learning and improving your investing skills. Moreover, we discussed index funds, a type of investment that can offer broad market exposure, low operating expenses, and low portfolio turnover. They're an excellent option for beginner investors due to their simplicity and potential for long-term growth. Now, this is only the beginning. There's a whole world of investing knowledge out there waiting for you, so keep learning, keep investing, and keep moving forward on your journey to wealth creation. Remember, the best time to start investing was yesterday. The second best time is now, so start your journey to wealth creation today. And don't forget to like, share, and subscribe to our channel for more investing education. We're curious to know about your investing experiences, so let's continue this conversation in the comments below.